I'll start with you and the question of tech. Really fascinating in terms of the dividend and the buyback coming back from Alphabet. I don't know if you can talk about individual stocks, but nonetheless, to me, there's an interesting story coming, which is that these are now cash-generating businesses, income-generating businesses, as well as that growth component. Are we looking at a new theme around stock investing? What does it tell us about the way these changes have come through?
I think you're absolutely right. I think that it is really interesting that we are starting to see some dividends from these companies. And I think for me really underscores, if you will, the importance of the cash flow picture for these companies. I mean, if you think very broad brush, but returns on assets are really a function of two things. Your discount rate that you apply to your cash flows. And cash flows are comprised of earnings and dividends. So it's interesting to see that mix shifting a little bit more towards dividends. But I'd say broadly, for us in 2024, that cash flow picture is really very important. I think the outlook on discount rates, and we can talk about that a little bit later on if you like, but I think there's been quite a lot of uncertainty around where discount rates go, where policy moves in the US, but also, of course, in Japan this morning. And so that cash flow picture is very important. I think for us at BNP Paribas Asset Management, areas where we see good cash flows and areas where we want to invest are indeed US tech, Japan, European banks and parts of EM Asia. I think those are the areas where we're seeing a good cash flow.
You've been adjusting some of your exposure, and we want to unpack that with you, certainly. Let's bring in Justina Lee at this point. Justina, is there a sustainability to the uplift that AI and tech is giving to these equity markets at this point?
Yeah, it's interesting because I feel like Alphabet and Microsoft, I mean, their earnings was really sort of the epitome, the best version of the Magnificent Seven story, which is that they're essentially kind of riding these structural trends and to an extent where they're almost not as vulnerable to the ups and downs of the business cycle. But I think you're kind of seeing from the market reaction to earnings this week, for instance, the reaction to Meta's earnings, that in a way, because the market has already rallied so much going into this earnings season, that the bar for a positive surprise, for a positive market reaction is actually quite high. And so I think, the positive reaction we're seeing to these two tech giants' earnings is a sign that, I mean, kind of despite those high expectations, they still managed to beat that.
Maybe we need to reformat, finally, the Magnificent Seven category, given some of the idiosyncrasies around some of these names. Justina, thank you. I'll come back to you with more questions on the macro at some point. But Maya, in terms of the expectation from some that the earnings story, and we had, Justina was nodding to this, 70% or so of S&P companies have come through with a beat, but the stock reaction, the market reaction has been a bit more mixed. Can the earnings story propel these markets higher amid a concern about higher for longer on rates?
Well, I mean, I think you're absolutely right. I mean, not only have beats been rewarded, but I guess what's interesting is misses have been punished quite badly, and particularly in Europe. So I think to us that sort of emphasizes, if you will, the importance of those earnings coming through. As I said before, I think areas where we'd be looking for good earnings and earnings perhaps above the street, European banks, for example, right? I mean, we've got, is it 3%, 3.5% earnings expected this year? We think there's considerable upside prospectively to that, as we have a structural shift moving out of negative interest rates with good balance sheets and pretty attractive valuations to boot. Similarly, with Japan. I mean, Japan has stood out to us really for the last 6-7 months as being one of the few areas where earnings at an index level have continued to rise, almost bucking the trend of other areas where earnings have been a bit softer. And important to say, it's been much more to our minds than just the yen.